Storybox Audio. Storybox Audio. Storybox Audio. Storybox Audio. Storybox Audio.
Okay, we're live now, right? I guess maybe I think you're on mute.
Hello. Yeah,
Oh, there we
sorry
go.
about that. Yes. Hello, everyone. Welcome to the third edition of Doowe's webinar series titled Financing Gas Infrastructure in Africa. My name is Gift Akor, and I have with me here Denver Nota. Hello, Denver.
Hi, Gift. Thank you for being with us today. Hello, everyone.
Yeah. Okay, so myself and Denver, we have the privilege of moderating this live webinar series, which we are particularly excited about because we are certain that it would be worth your time. And this particular edition is being put together by Doowe. And Doowe is an award-winning LP gas company and a leading supplier and distributor of liquefied petroleum gas in Nigeria, allowing customers to use LPG gas to power their homes and businesses. So, our company is an expert in LPG procurement, commissioning, bulk gas storage, cylinder filling and storage, LPG transport and delivery, installation and maintenance. Basically, everything, every single thing around LPG. We are fully committed to supporting best practices, sustainable development concerning all environmental matters. And we are constantly striving to offer a cleaner, more sustainable energy source for you. And in the future, we also take pride in our professional ability to provide cleaner energy for all energy needs and solutions for business entrepreneurs and individuals. So, our core value, we actually go with an acronym called PRIDE, which is professionalism, respect, integrity, dedication, and excellence. Once again, I welcome you all. Um, I'd like you to drop your name. We would like you to drop your name and your location and what you do in the comment box below. And like we always say, if you have any questions for us or for any of the speakers, you don't have to wait till this particular session is over before you drop your questions in the comment box. You can just get your questions rolling the moment they pop up. So yeah, once again, thank you for joining us.
Yes, thank you, Gift. And you can also engage with us on Twitter, Facebook, or any other social media platform by posting any vital information for our speakers that resonates with you. So if you get something that you really like, you can just tell us in the comment box. So you can type it out, quote them, and use the hashtag Dewey Webinar Series. So that's hashtag Dewey Webinar Series. Now, we have two incredible people with us today. Our guest speakers are Miss Olawunmi Olatunji of Brockville Investments and Mr. Jose Lewis from Repsol. So, introducing our first speaker today, it's Miss Olawunmi Olatunji, who is a research and investment professional with over 14 years of professional experience covering banking and finance, energy, economics, and asset management. She understands risks and enterprise development, and she's currently the CEO of Brockville Investments Limited, an asset management company with a focus on energy and natural resources sector. And based on her previous experience at Guaranteed Trust Bank PLC, First Bank of Nigeria, she successfully led various investment and research projects across the value chains of oil, gas, energy, and environment industries. These include like various upstream oil and gas development project, marginal oil field technical and economic analysis for investment, divestiture, and project finance purposes. And even now, she's also the co-founder at the Business Outliers, and she also holds a master's degree in petroleum geoscience with economics, and she's a charter holder for Charter Global Investment. So we are so honored to have you here with us, ma'am. And she'll be taking us on a ride for financing gas infrastructure, over financing gas infrastructure in Africa. Over to you now, ma'am.
Wow, thank you. Thank you very much. I hope you can hear me.
Yes, we can hear you perfectly.
Okay. All right. So thank you for having me here. I'm trying to set up my screen to share the presentation. Yeah, but it's a great honor to be here. I'm actually very excited to speak on this topic that is very dear to my heart. And based on the work that I have done in the past and I currently do, so I'm very excited to share. While I'm talking, I'd like to know if you can see my screen there. Hello?
Yes, we can see it.
All right, so okay. All right, so that's it. So like you've spoken about, my name is Olawunmi Olatunji, and I lead the firm at Brockville Investments Limited. We are an energy and natural resource asset management company. So we work across the value chain of oil, gas, power, mining, and everything called natural resources. We are able to do. We focus a lot on research and project development and project management as it is. So I'll go straight into the presentation now. So the year 2020, and this is talking about Nigeria specifically now, has been declared the decade of, it was said the year of gas, and then 2021 for the next 10 years was declared the decade of gas for Nigeria. And we've seen that there's an accelerated pace in gas development generally, and you begin to see changes and seemingly interesting investment opportunities, not just in Nigeria now, but across the African continent. And this webinar and my own section will focus on highlighting the considerations utilizing financing gas projects. So that's how I'll just run the presentation. I would follow this outline, starting with an introduction. I'll just talk briefly about the industry, despite the fact that I know that most of the listeners will probably be experts and they understand a bit of the industry, but I just want to touch on that a bit. Then I'll talk about financing gas infrastructure. Then I will now go to talk about key bankability criteria. But before I begin, I would like to tell you a little story. Now, okay, so this would have worked better on PowerPoint. And okay, so imagine a young boy somewhere in Kenya, in a remote village, where he has to do his homework by candlelight, and he's not able to do that at the best possible ways. And so imagine the boy sitting down there trying to sit down, do his homework with candlelight. It could be in Kenya, it could be in a remote village, it could even be in Lagos, anywhere that doesn't have the right amount of electricity that people need to live their regular lives. Is the kind of person I'm talking about. Now imagine the future where this same boy is having access to sufficient electricity, is able to do his science assignments, is able to do his classes online, and everything seems to work perfectly. In that same future that I'm talking about, cars are working on gas. So compressed natural gas would drive cars, CNG would drive tricycles, we used to drive even bicycles and motorbikes, But the truth is that, okay, so yeah, the truth is that future is actually now. And I mean, this is very true because we've seen that over the past couple of years, there have been estimates that about maybe 5,000 vehicles have been converted from diesel or oil-powered vehicles to to CNG-powered vehicles, especially in Nigeria. And then autogas is no longer something that we imagine. It's not a thing of imagination anymore. It's a reality. We have transportation system, buses run by autogas in some specific locations. We have autogas refilling stations coming up. Yeah, and then also we know the energy transition talk, where renewable energy, especially solar PV, is beginning to gain relevance as a source of power, and such that if gas doesn't take its place, the alternative energy will come to take over and become more relevant. Now I'm going to drive in now just to now take this into perspective to talk a bit about the topic. About half of the 1.2 billion people living in the African continent, they have no access to electricity. But Africa needs power, we know that, and it has the gas resources to provide that power. And gas plays a very significant role in the social, economic, and to drive the economy of continents in that power sector. Gas drives industry, so it drives industry from petrochemicals, fertilizers being the feedstock, to driving power plants that will drive steel and this kind of things. And then it's even very important in LPG, where it goes straight to the consumer. So the African continent, we continue to boast of a vast array of potential opportunities in that sector. But this challenging operating and regulatory environment, and even policy uncertainty, and this huge infrastructural deficits that has been very, very key deterrent to investment, which needs to be addressed. And of course, we've been seeing over the past couple of years there's been significant progress and addressing the various challenges in little ways, in big ways, and I believe that things will begin to continue to be better. Yeah, so now let's just go straight to talk about the gas sector. Just an overview. It's been said that gas is actually the future of fossil fuel, and natural gas has been projected to be the fastest moving fossil fuel over the next 2 decades. Gas is really appealing, especially because of the low carbon emission quality. It meets the need, the need to replace coal and even oil, maybe in the further future, maybe 50 years or so from now. It meets industrial standards, and because of that, petrochemical companies begin to take gas as feedstock that helps them in their work. And like I mentioned earlier, it's also very important in transportation, right? Yeah, so I'm going to go through just a sketchy diagram that talks a bit about the natural gas value chain. Now, this is a typical value chain, although we're using the Nigerian example here, but it's like a replica, the same kind of thing that will be very useful across Africa. So we have upstream, we have midstream, and then we have downstream. Over to my top right corner, top right corner here, we have the upstream, where gas is drilled, explored, and then produced, and then it goes down to storage and goes further down to the bottom, where you talk about LPG transmission to pipelines where they are shipped overseas by the Nigerian LNG. Then, of course, there's this West African gas pipeline that supplies gas to Benin, Togo, and Ghana. Then, across also that value chain, we have transmission pipelines, gas treatment and processing, storage facilities that takes the gas to petrochemical facilities, such as the LMA petrochemical that is located in, I think it's in Port Harcourt. Then we also have thermal gas plants that are across the country using gas to generate electricity. And this is the same kind of thing you see across different gas producing nations in the African continent. Then you talk about the downstream, where the local gas is used for heating, for factories, compressed natural gas for cars, and then liquefied LPG for household cooking and for restaurants, hotels, and all that. So yeah, so that's basically what the value chain is about. So having run through that value chain now, I think it's time for us to now go through the financing, the different financing types that are available. So looking through this value chain, there are really various available sources of financing, and it depends on the stage of the project. And the project operations determine the degree of risk that the financier perceives. So project sponsors and owners also, they require various form of financing throughout the life of the project. So the two key types of financing that we have is equity and debt. And of course, I just added some others I call them mezzanine and the strategic kind of financing, and I'll explain why in the time. So the first, or under equity, will be public offers, where a company is listed at the stock exchange, where it's able to raise equity for the business. And then, of course, right issues, when you're already listed but you want to you issue more shares to existing shareholders. Then it could be also private equities and even private placements, that is raising capital from a private group of people, and it's very private at that point in time. Then the next thing is debt. Under debt, we have the all-known, very well-known reserve-based lending. Reserve-based lending is very typical for upstream transactions, upstream oil and gas exploration, because, I mean, you're talking about the reserve being the security for the lending. So it's very complicated, it's complex, not necessarily complicated, but complex, and it requires a lot of due diligence, a lot of research and geological and engineering studies, and before this will even probably work for the financier. Then we have project finance, and which are syndicated loans. For that, hello, can you still hear me? I just want to be sure I'm still here.
Yes, we can still hear you.
Yes, we can.
Just wanted to be sure that I'm still on board. All right, so for project finance, is a situation where project sponsors come together to form a unique company called an SPV, that's a special purpose vehicle. Then they approach a bank now, and they mandate that bank. The bank becomes the mandated lead arranger. They mandate that bank to arrange financing for them from other banks. So the banks come together to form what is called a syndicate. So a syndicate is when different banks come together to provide financing for a particular project. Under that, the club deals is just a special kind of project finance as well. And then public-private partnership, which is usually called PPP, is also something that is also a type of project finance, where this involves the government, the participation between government and private. So, for instance, this can also be used in other parts, not especially only the oil and gas. So maybe a railway construction, there will be public and private. So there will be a private firm that is in charge just for proper operations, and then the government gives that kind of guarantee that would ensure that the financing is raised easily. Then there's regular corporate finance, is the regular kind of financing in the firms get to have. It could be in form of term loans or overdraft, and short-term tenor, mid-term tenors, and depending on what they need. Then there's also equity bridge financing, and this just comes in as a kind of short-term finance to bridge the need of that firm or the project at that point in time. Then there's letters of credit, inventory finance. So there are different structures that financiers and lenders have put in place to help organizations raise the kind of financing they need. Now, the next thing I wanted to talk about was mezzanine funding. So these two kind of funding, you have convertible debt and convertible bonds. Basically, anything convertible just means that it's a loan that can be converted to equity, or is a bond that can be converted to equity. The difference between a debt and a bond is that the bondholder can actually sell that debt instrument. It's tradable, so you can sell it, without waiting for maturity. So if you've seen, maybe for instance, a government body can say, and I remember when the Calabar Ranch, the Cattle Ranch, that's the name, is located in Nigeria, and Cross River State was developed. So the government partnered, the government of Cross River State partnered with from financing firms that they want to get funds from people. So that's a typical bond. But a convertible bond is where you can actually trade it before it's fully matures. Yeah. So the next thing is farm outs, which I categorize under strategic, and it's strategic because you just identified. A firm can identify a particular field or a portion of the field and say they need to farm out a certain part of the field. So they farm that out to another firm that becomes the operator, and with that, they're able to raise financing for other operations. So, for instance, there's Stop Creek Marginal Field was farmed out by Universal Energy to 7 Energy, I think around 2013. And there are several other examples like that. Then there's a carrier arrangement. So in a carrier arrangement is when the upstream IOC, I think it can also be called a modified carrier arrangement. So the upstream IOC would advance like a loan to finance the petroleum operations, right? And they advance a loan to all the parties that are in that particular venture. So when they finance the operation, they are required to receive their investment back or get their loans back to recover their costs. They partly do this via collecting tax, and they can also deduct partly from oil. So that's another way to raise financing, for a particular project. Then there's asset disposal. So you need to look at assets that are maybe not in use for the particular project, or maybe due to strategic change and strategic decisions, the firm needs to just sell off those assets to raise enough funds. I mean, it's typical to what a person would do. If you're cash strapped, you can sell off your vehicle or something to raise funds and use it to invest it in whatever you're doing. So that's exactly how that goes. Okay, so next I will move to, because I said earlier that the type of financing you need really is based on the need, the stage, or where a firm is at the point in time. So this next slide will talk about the need versus type of financing. So the first line talks about private equity development institution. So basically, upstream infrastructure, maybe for instance, processing facilities, evacuation, everything that has to do with evacuation, processing, pipelines, power plants. For this, the need would be you have to go to private equity or very big. So for development banks or commercial banks as well come in at some instance to finance some portion of maybe a particular transaction. And from the company's cash flow, it can be used to finance salaries, business operations. Suppliers' credits can be used to finance LPG cylinder. Now you can see that I begin to use examples that are more turned towards downstream. So if you want to finance things like some assets like LPG cylinders and trucks, you can have a partnership with the supplier, and you are able to refund when due to maybe some kind of repayment, or when the financing of the business increases. Then next will be if you want to finance minor assets like maybe stoves, hose and pipes. Then you'll be talking about working capital loans and overdraft, trade finance, or even import financing facilities. That's the IFF there, is import financing facilities. If you want to finance things like bullet tanks, bottling equipment, then you can go to a domestic bank for a long-term bank loan. If you want to finance cylinders, trucks, and stoves as well, you can go to development bank. Then generally, all capital requirements, you can go to export credit agency like the Afrexim Bank or the Nexim Bank or any other export credit agency that is in the region of focus. But the key here to know is that this is not like a cast in stone rule. It's each of this financing has to be decided. We look at different, apart from maybe for the cash flow, salaries and operation, and then the supplier's credit. The other ones you can, depending on the need and what's available at that time, I'm sure that if the lenders can work out what is most appropriate for the situation. Okay, so next, I'll talk about financing sources. And yeah, I try to give example of transactions and I even give some firm names that have financed them through transactions in the past. So for instance, I had mentioned that you can visit private equity firms. So private equity firm, an example is African Capital Alliance that financed First Agrocarbon in about 2013. But of course, they've exited the transaction right now. Then there's another emerging infrastructure fund. So if you think of the Indorama Eleme fertilizer, and so they were able to finance them for $35 million. Then the Ghana Takoradi, the 110 million megawatts power plant in Takoradi, Ghana, was financed also by this emerging infrastructure fund for the tune of $15 million. Another private equity firm that finances big ticket transactions like that would be CDC groups. And the CDC group finance the Amadi Energy Power Plant. The Amadi Energy Power Plant is also located in Ghana. It's a 203 megawatt power plant. It was financed with $83 million debt. Now, there can also be transactions with development banks, right? And you can look at the entrepreneurial development banks, also a kind of financing that finance the Azura Power Plant with $40 million. So the Azura Power Plant is located in Nigeria. Then another development bank is African Finance Corporation. They finance Dangote Oil Refinery to the tune of $300 million senior debt, right? So, of course, other options would be offshore hedge funds, government intervention loans, banks of industry across the different African countries, and then even the commercial banks that you have. So not only do you have to go offshore, depending on where you are. So even if at the beginning of the project, the commencement of the project, you might have to form an SPV, get financing from those kind of offshore sources. But while the project is running, there are other local sources can also become very valuable. Even at the beginning of the project, the local commercial banks can become very valuable, depending on the different where you are at that stage in time. Okay, so I'm going to talk about a very important term now called bankability. It's, how will I say, it's a term that has been, it's very popular, it's well used, and you want to say to ensure that a project is bankable, there are a lot of consideration given to economic, financial, technical, even environmental factors are very important to be considered. But, excuse me?
Oh no, please go ahead. Like, I'm just listening intently. This is good.
Okay, thank you. Okay, so but before we go ahead, we would like to know what exactly bankability is. So it's basically the willingness of a well-established financial institution to finance a project or proposal at a very reasonable interest rate. And it's essentially a function of risk and reputation. So, and the lender's perception of risk. So because a lot of these projects are complex, due diligence is key. Detailed technical, legal, market, and financial regulatory due diligence must be carried out, and they are also fit for purpose, so like they're bespoke. You cannot take the due diligence done for Azura Power Plant and use it for maybe LMA petrochemicals or something. It has to be bespoke and fit for purpose for every particular project that you're going into. So next, I will talk about key bankability considerations. And yeah, so now let's take, for instance, there is this 1.3 billion ammonia plant that is planned by a Moroccan phosphate producer called OCP Group. They comprise of multiple interconnected units. Now, you can imagine a power plant. It has different units. So there must be a very clear and comprehensive understanding of the different risks, especially the interface risk where the different units come together. So we'll be thinking of construction. What are the risks in construction? What are the risks in operation? What are the risks in even licensing, technology arrangements, the relevant products? Are there sales arrangements in place? Are there offtake arrangements and all this kind of thing? So the product sponsor needs to look at those kind of risks and see how this will come to play in affecting their ability to access financing. Even rigorous risk assessments will be done for environmental risk assessment and all those kind of things. So the financiers, whether they're even debt or equity financiers, they want to avoid catastrophes and anything that can cause reputational problems for them. So they make sure that environmental standards are in place, or even social standards. So engaging with community, they want to be sure, because at the end of the day, these kind of things can really impact the success of the project. So that's why I said due diligence is very key. So I will talk about risk now, but from a lender's perspective. So for large-scale projects, risk assessment is framed based on some factors, and these factors actually affect the availability of financing. Now, let's look at these factors. The type of project is very key. So whether the project is upstream power plant, or no, sorry, upstream, let's say processing or exploration, or midstream power plant, or petrochemical, like I've been used as an example in the past, or even downstream LPG. They want to understand what the project is about. Then the location of the project is important because it has a consequence in terms of the location, the political, legal, regulatory. So a project that is located in Niger Delta will be viewed differently from a project that is located in Mozambique because the political terrain is different, the security challenges are different, the legal terrain is also different. So they want to know about that. Then the identity, and now you just want to know about the obligor, that's the sponsor. Who are they? How credit worthy are they? Do they even have existing liabilities? Because you are careful about the kind of financing mix that they carry so that they will not be overly leveraged. They don't have too much loan. So you want to know existing liabilities and how well they are funding. They're working on these liabilities that they're able to pay. So when I say existing liabilities, that's existing loans they have to other firms, other banks, or other lenders. Then they want to know about the contractual rights and obligations, basically everything about the product. Now, they also want to understand, lenders want to understand the stakeholders and participants. So usually in a project finance setting, they want to, there are so many participants there. You have the sponsors, you have the off-takers, you have feedstock suppliers, you have regulators, contractors, operators. Now, let's look for, as an example, Nigeria just issued so there was this 2020 marginal field round, and there's been a lot of progress on it. So let's take, for instance, there's going to be a financing for maybe something to enhance the field development plan for a particular field, and you want to think of something like maybe a hub or a gas processing hub. So the lender will want to know who exactly are the sponsors and how much technical competence do they have, who are the off-takers. So if you process this gas, for instance, who do you send it to? So do you send it through pipelines? Are the pipelines present? Or do you convert it to gas to liquid? So you do convert the gas to liquid and move them in cryogenic trucks. Are there even enough the roads, are they even accessible enough for all those kind of things? Or after you do the processing, are you able to put it directly into the pipeline of another existing pipeline of another field, maybe of the original farmer or the original owner of the field, and based on that, you need to just think about all the different things. So bankers want to understand, lenders want to understand clearly how that will work. Then another thing the lenders would like to see is availability of, not just availability now, but availability and coverage of the insurance. So how much the insurance covers, what does it do, what does it not do, and what are the liabilities of the insurance company. Then sometimes they look at their own firm and even the requirements of the lending firm itself. So for example, they have some certain capital reserve allocation that they cannot allocate more than a certain amount for a certain project, so they look within. Then even their own risk appetite, that also affects if they are able to finance a particular project. So the financial industry has actually established means of addressing this risk, right? And it also helps to facilitate the structuring of what is called bankable projects through the adoption of a particular recognized framework. So, I mean, a loan officer, officer in the lending company, bank, or whatever, the private equity firm, will have like a standard framework where you can work with so it will do that assessment as like check boxes and all these kind of things before he or she can take the request for management approval. So there are like credit approval processes that they will go through, and I'm going to go through some certain key considerations, and it might just be like a recap of the things I've seen, but putting it in some kind of.
Sorry,
should I go ahead?
Sorry, wait, sorry. Like we have also like another speaker, and like we're just like running, just make sure like time is of the essence, right, at the moment.
Don't worry, this is my last slide, and I apologize.
Oh, because like we have another speaker here.
I understand. So like I was talking about perception of risk and bankability, and so cash flow certainty is very important, and every lender wants to know that there's enough cash flow. So all the players that are advised to consider that supply risk to ensure that your funds are able to come, even the credit strength of the off takers. For instance, power generating companies are often off takers for gas, so you want to be sure that the power generating company is able to even recover its own funds, right, from electricity sales and all that. Then technical and commercial capabilities, I talked about that already. Then there's legal framework. One key thing here is to be sure that the contracts are enforceable. You want to be sure that the contracts are enforceable. Then talking about political risk, there's that political risk that in the perspective of usually the tenure for government is often 4 years, but project finance is longer. So there's the risk of when they change power, does that affect the project in any way? And then the final one would just be about the project location, which I've talked about. So I am, like I said, this is my lifestyle. So in closing, we can say that gas business across the value chain is very capital intensive, depending exactly on where you are. But it's key to understand and mitigate the risk to be able to find the right kind of financing. And all the infrastructure challenges that exist in the country and even across the African markets should, once they are able to be addressed, it will help to enhance and even raise investors' confidence and improve the bankability of the project. So that's about all for me. I'll be able to take questions and from the audience. So thank you so much.
Yeah, thank you so much, Ms. Olawunmi, for that, for the simplicity in delivering this, and your presentation was so detailed. Thank you so much for that. And just a quick one, just in case you joined us quite late, we said you could just drop your questions in the comment box. Our second speaker is going to come up shortly, and as soon as he is done, we will take questions, and that's where our speakers will be ready to answer your questions, and it's going to be very engaging. Yeah, so thank you.
All right, thank you for that. Like that was a very good presentation. Like it's very deep. Like you can see, like you have so much passion for it, and that's why I love it. It was so educational. I really enjoyed it.
Thank you.
All right. Okay, so like up next, we have the honor of introducing Mr. Jose Luis Garcia, an expert who has got more than 20 years experience working for the Spanish oil major Repsol's LPG division. Thank you for joining us. Thank you for joining us today. We're very honored. And just like a quick little intro for him, Jose Luis Garcia has worked in different areas such as planning, controlling, M&A, business development, and supply, which has given him a wide know-how of the whole value chain since gas processing and LPG introduction until distribution, commercialization, and retail. And regarding geographical areas, his experience as management team covers Western Europe, Latin America, and here in Africa and Morocco. And on top of that, he's been involved in M&A opportunities in Southeast Asia and Africa. So thank you for being with us here today, sir. Now over to you.
Good afternoon, ladies and gentlemen. Very honored to be here today to share some of my experiences in LPG and oil and gas sector. Thank you all for attending, and especially thanks to Doowe for organizing. And of course, congratulations to Olawunmi for her wonderful presentation. So let me see if I can deal with this platform, as it is my first time with it. I hope you can see my screen.
Oh yes, we can see it perfectly.
Great, thank you. Today I'm talking to you of three topics. First one, the topic of the day, financing gas infrastructure in Africa, of course. And then we will move very briefly to introduce Mont Belvieu prices, Mont Belvieu quotations. Perhaps some of you already know about Mont Belvieu, perhaps some other not. And they are very important for LPG cost in West Africa. So we will have a look at it. And finally, I would like to take this opportunity to introduce and let you know about our social initiative as in LPG in Nigeria. So let's go ahead. Regarding financing gas infrastructure in Africa, first message I would like to tell you is that never before in history there has been such a huge amount of money in the world's financial system, especially in developed countries' financial system. The central bank's balance sheets have multiplied by 6 since financial crisis. They add up about $4 trillion before financial crisis, as we can see on the picture. Then it climbed up to $16 trillion and before pandemic, and now is about $24 trillion, which is 6 times more than before the financial crisis. So first idea, there is money. Actually, there is too much money in developed countries. Second main idea, when there is a surplus or a lot of any kind of good, what happens to price? It reduces. That exactly is what has happened with the price of money. Interest rates have dropped across developed countries due to fresh money flow. And you can see on the picture, the US 10-year bond yield has fallen from 5% before financial crisis just to 1.6% of this month. So we have a lot of money and we have cheap money, at least on developed markets. This has had some impact or affected private investors. And it is that current returns of investments for private investors have also reduced compared to what it used to be. In some sense, relaxed monetary policies designed to support the public deficits in developed countries are punishing private investors, and these are the returns that have got private investors during the last 5 years, depending on the risk and the type of fund, from a 4% in a fund investing in global public debt to a 6.7 if this public debt is or comes from emerging markets, and up to 2% if we are talking of stocks in emerging markets. Okay, so we have a lot of money, cheap money, and investors punish which are willing to get fresh and profitable opportunities. So that at first sight that seems the ideal world for Africa and West Africa to capture capital for growth and development. But this is not happening. And it is due to two main block of factors. Actually, emerging countries are facing some important breaks when attracting foreign investment. First, coming from risk aversion, and then here we have macroeconomic imbalances, for instance, Turkey, or strong devaluations and currency exchange controls, for instance, Argentina or what is happening in Venezuela, or commodities prices drop, for instance, what is suffering Nigeria with crude oil price drop. And especially during this pandemic, even healthy companies have focused on cash preservation in developed countries. International expansion and growth plans have been kept in the fridge. As simple and as direct like this. These four breaks are related to risk aversion. But on top of that, we have also some political factors that were not on the table, let's say, 10 years ago. And this is the focus of developed countries' governments on green economy, which is going to address private investment to energy transition projects in developed countries. We are talking of electric mobility, renewable generation, reduction of CO2 emissions, and that is expected to take and cope with a lot of financial resources in developed countries. And in this line, big asset management firms are more and more concerned and prioritize sustainability and social responsibility in their investment criteria, pushing apart or pushing away a project that they feel are far away from this criteria. And the bad news is we do not foresee significant changes on this in short term, but the good news is there are still some financing alternatives left for gas infrastructures in Africa. Let's take for granted that macroeconomic imbalances, exchange rate problems, and so on are got over. Okay, let's imagine we have a stable and solid macroeconomic scenario. Then Africa faces three challenges for financing gas infrastructures. First one is how to calling up more and more local and regional capital, enhancing the movement of local and regional capital. Second one is strengthening local banking systems in order to provide required loans to local economy. And finally, setting up a professional and reputed channel to attract developed countries' private capital willing to invest in profitable projects in emerging markets. People able to connect the excess of liquidity and capital in developed countries with profitable projects in emerging markets. Then, according to our experience in Western Europe and Latin American markets, we could picture two main strategic lines for two different kind of projects. when we are considering large projects with high capex, well, we can find three tools, three ways. The initial public offerings in stock markets, bringing to a project new shareholders, small and private shareholders. This in order to leverage medium class savings and make them part of the country development. In other words, that is part of the American dream. Second initiative would be incentives. We are talking of government official incentives to local banks to funnel foreign and local loans. Sometimes banks have not the required support or the required incentives from government for legislation to give more loans to industry and customers. And finally, the establishment of strategic alliances between local specialized private equity teams with their equivalents in developed countries in order to develop this new channel to attract developed countries' private funding in form of stakes or in forms of structured financings to African companies and projects. And if we go to the last link of the value chain, the retail link, then what we need is incentives to local banks for giving loans to users for first access to gas, let's say stoves, cylinders. This is the world of microcredits, okay? Or if not directly to end consumers, then incentives to banks for giving revolving loans to gas retail companies in order them to finance their clients. So it is or a direct way from banks to consumers, or an indirect way from banks to consumer going through the retail companies. To see in order to see in some specific projects, not only in theory. These are some examples of different systems of financing we have seen in other regions. For instance, the large-scale projects, we are talking of LPG import terminals, natural gas pipelines, natural gas or LPG distribution networks in cities, mini LNG projects, or LPG production facilities. This type of projects could go through the first chapters with IPOs, strong local bank supports through long-term loans, with a state or federal guarantee. This is important. If the state government or the federal government is able to give a warranty to the bank, the bank will be more willing to finance the project. Or the issuing international bonds for developed countries' private equities. And at this point, obviously, the more predictable the incomes, the easier for the bond emission. Moving toward the right side, small scale projects could be LPG cylinders and stoves for organic growth, small LPG plants, reticulated LPG for condominiums or industrial poles or small towns, and bulk facilities, tanks, and so on for LPG, LNG, or CNG industrial customers. These projects could be financed, as we said before, through local banks microcredits or through flexible and revolving credits from local banks to retail companies, and then the retail companies finance organic growth. Okay, then as I introduced some minutes ago, I would like to give you some guidelines on Mont Belvieu LPG prices. Mont Belvieu is LPG hub located in Houston, in Texas, with about 22 million tons storage capacity in a salt dump. It is the largest LPG hub and storage in the world by far. And that has made that Mont Belvieu means for LPG prices what WTI means for crude oil prices. When you think in WTI for crude oil, then it is the same with Mont Belvieu for LPG. Mont Belvieu prices are broadly used when buying or selling LPG across the Americas. All the Americas follow Mont Belvieu, and not only Americas. Any U.S. export from U.S. Gulf, no matter the region of destination, follows Mont Belvieu. So why are Mont Belvieu prices so important for Nigeria and West Africa? This is an historical and tradition topic. When the USA was net importer before the shale gas boom, US Gulf was a regular destination for West Africa surplus, and exports netback was calculated as Mont Belvieu minus maritime freight, which is quite logical. And when the USA turned into net exporter and West Africa started importing more and more LPG from US Gulf, then the CIF import cost was also based in Mont Belvieu plus shipping costs. On top of that, Nigeria LNG LPG supplies to the Nigerian domestic market also follows Mont Belvieu, is a formula linked to Mont Belvieu. Then when you see Mont Belvieu is rising or is decreasing, then you can expect a similar movement in next days or in next weeks in Nigerian depot prices. In this picture, you can see the evolution of Mont Belvieu prices during pandemic, 2020 and 2021 years. Butane and propane, they drop in March with the arrival of the pandemic to Europe and USA. And since that valley, they have been increasing more and more, and this year we are even above the pre-pandemic levels. So if depot prices in Nigeria have increased a lot during last 12 months, Mont Belvieu is part of the is part of the reason. And as promised, I finally would like to introduce you briefly our LPG in Nigeria initiative. LPG in Nigeria is a social initiative, a social enterprise, where we aim to share information on LPG for allowing the market growth, bringing more and more consumers to LPG, and helping LPG companies and retailers in Nigeria to grow and develop. We started at Facebook page on May 2011. The Facebook page is also running. You can go through it. Joined Twitter and LinkedIn in 2019, and on December last year we commenced blogging and publishing industry information on a specific and own website, lpgnigeria.com. Currently, we have over 3,000 followers on Facebook and 800 followers on Twitter. And we also provide a blog of LPG industry information where, for instance, you can follow the evolution of Mont Belvieu prices and the Nigeria depot prices. So it's a way, it's a good way, a good place to be aware of how is evolving the wholesale price in Nigeria and what we could expect according to market movements in US Gulf. We also have a chat room, a marketplace, and we can also offer consultancy services and the sale of LPG tanks and accessories through a partnership with a Turkey manufacturer called Minmac. And that is my presentation. Thank you so much again for attending, for being here, and give me the opportunity to share some of my experiences with all of you.
All right. Thank you so much for that, Mr. Garcia.
Thank you so much. Yeah, that was very detailed too. Thank you so much. So, sir, for you, we have one question for you right now from the audience. I think one Ife asked, like, typically, what framework supports or drives the financing for gas projects? This is in respect to dry and wet gas. Or like what kind of framework supports or drive the financing for gas projects in respect to wet or dry gas? Sir, can you hear me?
Oh yes,
Can you hear me?
Yes. Well, if you want me to give my opinion, for oil upstream companies, let's say upstream companies are quite single product. I mean, if it is a gas field, their main and only concern is the dry gas. And liquids, let's say natural gasoline or LPG, is a problem for them. They know less about marketing and logistics. They need different kind of takers, and then for them is more difficult to deal with LPG and natural gasoline than with dry gas. So if a third party is able to provide part of the solution for LPG and natural gasoline, I think it would help for the whole financing of the project, because it is more incomes, more money from the same flow of gas.
Okay.
All right.
Okay. Thank you very much for that. Okay, Miss Olawunmi. Okay, so we have just one question for you. So when you talked about different type of different ways where we could actually finance gas in Nigeria, which of these strategies do you think works best in Africa?
Well, thanks for the question. So like I said, it depends on where you are in the value chain, right? So whether you are upstream, midstream, or downstream. A lot of the examples I gave, they're skewed towards upstream, right? So we're talking about private equity, offshore capital, and all that. But then there was a slide I also showed that talked about the need. So are we
Yes.
talking about the beginning stage of the project? So project financing at the very beginning, so you need to focus on that. So if you're talking about it's a company, it's in existence, it has salaries to pay and all that. So we'll be thinking of cash flow from the company operation. So it depends on where you are in the value chain, whether it's upstream, midstream, or downstream, and then what stage of business that will determine what exactly that you will have available to you or you've been needing really. So it's really the business need.
Okay. Wow. Thank you very much for that. And then,
All
okay,
right.
just one more question added to what you said. For the beginner stage, I know you've kind of answered this question when you were just giving us the presentation. But for the beginner stage, which would you say is actually the most challenging for a beginner? Let's say someone who is just like a complete novice, the person is just a beginner, the person is trying to get into the business and trying to get finance. Which aspect do you think would be the most challenging and what you would advise not to?
I'm not quite sure I get it. What do you mean? Which aspect? Is it which aspect of the business or I'm not clear.
No. The strategies. When you're talking about the different strategies, we had the equity, debt, and then which
Okay,
of
okay,
them,
okay.
yes, which of them do you think would be the most challenging for a complete novice, like a beginner?
Okay, so thanks for the question again. Really, the most projects there has to be equity contribution, equity participation, equity investors, whatever the stage of business or whatever the value chain. So whether we're going upstream or LPG, usually you start with your own equity or a group of investors come together and they become sponsors of that project. So equity has to always come in first before you talk about debt.
Okay, well, thank you. Thank you very much.
Yeah. We also have like another question here that says, like this can be for both of you. It says that can the same strategies implanted in European countries be successfully implanted in Africa as well? Could they both apply in the same regard?
Yeah, so either of you
Uh,
can answer this particular
Yeah.
question. If the same strategies can be implemented in Africa and in Europe too, does it really work worldwide?
Yes, thank you for the question. It's very interesting, and the answer for me is definitely yes, if the framework and the conditions are more or less equivalent. Okay, it is very important macroeconomic stability. If you have a country with no macroeconomic imbalances, where the exchange rate is more or less stable and unpredictable, and there are no severe barriers for capitals and dividends flow, the money will arrive for sure. It has happened before in Latin America and Southeast Asia.
Okay.
Okay.
All right. Thank you for
Okay,
that.
so thanks for your perspective, and I would want to agree with you that. So I would not say yes, and then also it depends. So there are certain strategies or certain financing options that cut across wherever you are. Like this was I've mentioned, but there might be some options, opportunities that may be available that we don't have. So, for instance, pension fund administrator, they could serve as long-term financing, but the structure here is not well. I'm talking Nigeria now. I'm not talking World Africa, and may not be well in place yet for projects to access those kind of PFAs for funding. But I mean, it's a very good long-term financing, especially because of the nature of gas. It's capital intensive. It needs patient capital, so capital that you can have access to, but the lender is not in a hurry to want you to give us. So it's patient capital. So some options may not be available, but yes, generally a lot of the options cut across, whether you're in Europe or you're in Americas or Asia Pacific. I would agree.
Okay, yeah. Thank you very much for that. Okay. For you, Ms. Olawunmi, just one question, which is different. You didn't mention this in your presentation. This question is quite personal. Yeah, so you are young, you're very young, and you are a woman, an African woman, and you've been in this industry for the last couple of years, which can actually be challenging. It's unusual for an African woman to be in this field for a couple of years. What would you say to, because we have some of our audiences are actually young women right now. What would be your personal, will I say, advice to some young women who are just trying to get started, who are very much interested in LPG and they're trying to get started in the industry? What would you say to this women?
Wow, thank you. Thanks for considering me young. Okay, so my industry has spanned two main industries, from finance, my experience rather, from finance to to gas and oil and all that. So I would say for any person wanting to start, whether in a professional career, getting a job and building a career, or maybe you've worked for a couple of years and you want to branch into entrepreneurship and all that. There's something I always call like having a clear vision of what you want to do. So, I mean, I listened to a talk by Audrey Ezigbo. She's the president of the Nigerian Gas Association, and she did a short talk on some like 5 things I would have told to my younger self, that kind of thing. And I started thinking, wow, there's some things I would have told to my younger self, and basically this is one of it. It's very good to have a clear path to know what you want to do, because just whether in career or in business, if you're not very clear of your vision and where you're going, you find out you'll be in the Me Too, what they call the Me Too syndrome, where you want to try everything, you want to try different things. And if you're not very clear that, okay, I'm Doowe Gas and I'm into LPG and I can provide services across all the value chain of LPG, then that's very specific. So you have to be what you call laser focused on what you're doing. That way you can make mileage quickly, you can go faster. And if it's in your career, here we understand that in career sometimes there is this burning passion to cross from maybe some sales, business development to technical, or from technical and all that. But you might not know everything, but as you realize and you come to the full realization of what you do, you need to stay focused so that you can grow and be better at what you're doing. Yeah. So basically that would be it.
Wow. Thank you very much, sir, ma'am. I mean,
Mm.
and for you, Mr. Lewis, just one personal question before, just one last question, Mr. Lewis. So we're just interested in knowing what's been your highest challenge in the industry, especially in Africa, because your business also cuts across Africa too. What's been the most challenging thing for you in Africa so far?
Oof. I would say financing,
Financing.
financing and regulatory framework.
Oh,
So, sometimes it is because of excess of regulation, and sometimes it is because the absence of proper regulation.
okay.
But the rest, okay, everything in a business is a challenge. But the rest, I think, people has or can achieve easily capabilities, logistics with less or more difficulties, but can be developed, and the market, sorry, will grow. Let's remember that it's not far away that Western Europe was in the situation Africa is now. It is only 50, 60 years ago, which in terms of history is nothing.
True.
All right.
True.
I just wanted to ask one last question from me. So for Mr. Garcia, I just wanted to know, like, what are some examples of like the, as you're saying, like the macroeconomic imbalances that like impact the financing of a country? Like, what would you say like are some of the examples of these imbalances?
Mainly public deficit and the impact that it usually have in exchange rate.
Oh, okay. So like,
Because,
would that include?
yes, let's think that LPG or natural gas or in general oil and gas products are quoted at price in US dollars. So
Okay.
if your currency has no value, like it is the case of Zimbabwe or Venezuela, then you just can't buy it.
Yeah.
You need stability on exchange rate. For a stable exchange rate, you need a stable macroeconomy.
All right.
Okay.
All right.
Yeah.
Thank you so much for that answer.
Yeah, thank you too. And Ms. Olawunmi, thank you so much. Thank you both so much for actually joining us today, for the simplicity in delivering this particular presentation. And it was actually fully packed, highly informative, and quite intense. And for that, we
Yes.
say thank you. Yes, and we can unfortunately won't be able to take all of the questions. So if you have more questions regarding anything that either of them have said, you can just send the question across to our social media, like we said earlier when we started, or you can send your questions to info@doowe.ng, info@doowe.ng. Before we conclude, we have two very important notices for you. First, we would like to say that we are looking for someone to join our team. That means that we are recruiting. So we have a vacancy for a course coordinator. If you have some good communication and organizational skills, you have the ability to create, design content, and most especially you have the inquisitiveness to learn more, then you should just shoot your shot with us via our website at www.doowe.ng or across all of our social media platform. Secondly, we are working on a support program to help those who need funds to run as long as possible, so long as we can guarantee and monitor their businesses. Our auto gas development and training school will soon be open for everyone who wishes to develop skills, and it is supported by the government and has been heavily discounted for everyone. So just look out for that. And also, yeah, you could keep in touch with any of our businesses and technical teams. So once again, we say thank you for joining us today, and we hope that you actually took something very important.
All right, yeah, and like thank you. That was so great hearing from both of our guests. Those like presentations were very detailed, informative, and they gave very good answers to the questions I had. And yes, and from me as well. Thank you once again for joining us, and please stay safe.
Yeah, stay safe. Thank you, and bye.
Bye.
Storyblocks Audio. Storyblocks Audio. Storyblocks Audio.